This is Alan Farley from FX Empire. JPMorgan Chase and Company entered a very strong uptrend after the 2016 presidential election, topping out right around 120 in the first quarter of 2018. It then carved this very broad inverse head and shoulders pattern, finally breaking out in the fourth quarter of 2019 and topping out at the very start of 2020 in an all-time high above 140. And then pulled back into February, collapsed with world markets in February, dropping to a three-year low where it bounced in March. Now, price action since that time has been very erratic. Been a number of recovery waves, but just an equal number of sell-off waves. So it's made very little progress. So it's now trading below this descending 200-day moving average, which is bearish. Now, the 200-week moving average cuts right through this boundary right around here, and you can see the stock has made no progress off the 200-week moving average now for about 5 months. Well, this is equally bearish, so the stock could very easily come back to this blue line up here in the 90s and break down and set up a test at the March low. Now, more ominously, long-term buying pressure accumulation topped out at the start of 2018. It's been trending lower for more than 2.5 years now. Now, this tells us that sponsorship institutions are stepping aside, stepping away from this stock and the banking sector in general, probably due to very low interest rates in which banks have a hard time making money. So the prognosis is not good, and it's very possible JP Morgan will eventually break this March low and trade down into the 50s or the 60s.